Kia ora and welcome to episode number 10 of the New Zealand Small Business and Entrepreneur Festival podcast, delivered to you by DHL, connecting your business to the world. Today we're again very, very lucky to have Adrienne, Begbie and Huia Manuel from Prospa, and we're going to be talking about small business lending, the do's and don'ts, and we're going to get some really good insights for you. So without further ado, I will bring both Adrienne and Huia. Kia ora.
Hi, how are you?
I'm very well. I'm like always, I'm calling from Rotorua. To my left, I've got Adrienne. Where are you in New Zealand?
Oh, sorry, I'm in Torbay in Auckland.
And Huia?
I'm in North Canterbury, Leithfield Beach, beautiful part of the world.
Oh, wow. Down south. Nice. Today, we're going to be talking about small business lending, some smart options and some not so smart options to think about. Like we do on most of our podcasts, I always like to try and get to know you guys a little bit more. So, Adrienne, I'll start with you. If it's okay, it would be awesome if you could talk to us about your first ever job, your first ever paid job, not a professional like career job, but just a job. And then a little bit of an origin story to get to where you are now. And then I'll hand it over to Huia, and then you can do the same, if that's okay. So where you go.
That's excellent. Thanks, Craig. First ever job, I was 14. So I started out working for my mum's friend. So I was the post girl, has to go and pick up the post. Good old days. We actually got physical post. You used to have to wander down to the post shop, pick it up, bring it back, hand it around the office, make everyone a cup of tea. So my sister did that job. She's 12 months older than me. Then I did it, and then my brother did it as well. So we all started there. And then from there, I travelled overseas for quite a bit, and then I got involved in mortgages. So I was in a non-bank mortgage business for a couple of years before I came up to Auckland. I was in Nelson. I'm actually from the South Island. So I was in Nelson then. Came up to Auckland and started with Genworth, so the mortgage insurer. So I was with Genworth for 11 years. Half of that in New Zealand, half of it in Australia. Then moved into mortgages, Resimac. So Huia and I both came from Resimac, the non-bank mortgage provider for New Zealand. I was there for 8 years and now been at Prospa for nearly 3.
Cool.
Okay. So I saw the question and I went last night and I sat there and I went through I went first job and all the jobs I've had. So Prospa is my job 25.
Oh, wow. Yeah.
I know. The last 15 years has been with 3 companies. So as Aid said, there's Prospa, which is amazing. Before that, we're at Resimac Home Loans, which was phenomenal. And then before that, I was with the Westpac Group Bank SA in Australia, and that was for 10 years. So out of the 25, the last 15 years, there's been 3 companies. But my first job was a mobile video van. Remember those? So my auntie had that. So I'd go around and do the videos and swap them out and make sure they're all rewound and make sure we got the right videos back instead of someone's dubbed videos, they put in the cap, you have to check all that. But when I look through the whole 25 jobs I've done, there's some prevalent things that come out. So, and out of those, 4 times I've been self-employed. So bought into pubs, had a restaurant, did massage therapy at a time, worked as a nursing
croupier.
So all my roles have actually been really people-facing, helping people, helping people to help people. And I'll leave it with, like, I've always left a business better than when I started in it.
That's a good trait to have. So my next question I'm going to ask, and you both as well, is if you could let me know what your favorite brand is and why that brand is your favorite. And let's go alphabetically, and Adrienne, I'll go over to you.
Thanks, Craig. Favorite brand, that's a tough one. So if you ask me today, in my current world, it would probably be Malfoy Gin. But that's not my lifetime favourite. So I haven't been drinking since I was 5. If you ask me my lifetime favourite brand, it would have to be Lego. So Lego is one. So I have 3 children, one who's 17, one who's 14, and one who's 5, and have spent many, many hours of my life making Lego, breaking Lego, making Lego, breaking Lego, and have thoroughly enjoyed it. So it's a strategic thing to do. It's building, it's spending time with the kids. So that would have to be my favourite.
This is a great question. And so even talking through, it's like, I have to always be like, go homegrown, have to go old school, has to be something that like provides lots of happy memories. We're coming into summer, so there's all that nostalgia. and a brand with longevity, and also still a go-to, so the quality has to be there. And I was born in Rotorua too, so we always travelled up north for holidays, and so would be travelling from Rotorua to Northland, and then you come around the corner and you'd see the big tip-top building, and you thought ice cream and hokey pokey and fruit juice, and it's halfway to Auckland and halfway to Northland, and hopefully we stop at the fish and chip shop soon and get that, and also an ice cream on the way.
They've had some really cool campaigns over the years with the trumpet and things like that as well.
Well, yeah, that's right. Because you think, like, you don't think tip top. You think, what do I love? Hokey pokey. I love fruit juice. I love, I love those things. So they sell on their product, which is phenomenal, and it like, goes back to all those heartstrings. So yeah.
So today we're going to be focusing on business lending and all parts of that, and really get into the definition of what that is. But before we move into the sort of serious stuff, can you tell us a little bit about what Prospa is, and you can both just riff off this a little bit yourselves?
So Prospa, we are a fintech. So some people that don't know what that is, so it's financial technology. So fintech online business lending is what we do. So we're 9 years old in Australia and nearly 3 years old in New Zealand. So we've been here for 3 years. So it's an extraordinary business. So as I said, I was in insurance before, and then in mortgages, and then we came over to Prospa. So I came over and then pulled Huia over with me, because it's an extraordinary business, and the process and the technology and the people are just amazing. So second to none of any business I've ever worked in. The technology, so basically a customer, they're going to go looking for funding. They can find us multiple ways. So we're online, we do radio, we do TV, so they can hear about us multiple ways. But then they come to us, we use we've got our own credit decision engine, so we can make a decision within 15 seconds. So we use all real-time data, so we're actually looking at a business today. So, and we'll talk about challenges later, but one of the key things that we do that's different is we're making a decision based on how healthy that business is today. Not 2 years ago's financials, not last year's financials, not on a business forecast. We're actually looking at what has happened in that business right now, and then we can tell them how much they can afford to lend under our model. So we can do that. Our system can do that within 15 seconds, and then we do it all online. So it's all sustainable, it's all scalable. And then while we're talking to the customer, we can send them, once it's approved and they accept it, we can send them their documents on DocuSign, and they can have the funding in their account within 24 hours, if not same day. We have deals come in the morning and they've got the money in their account the same day. And so the other key point to that is it's also unsecured. So we don't take assets up to 100,000, 150,000 now, Huia. We do lending from 5,000 up to 500,000. So we don't take an upfront security up to 150,000. After that, we just take a GSA on the business.
Yeah, and to Adrienne's point, up to 250,000, we can do the approval using our credit decision engine, looking at the business last 8 to 12 months business bank statements. It takes away the need for all of that extra paperwork that every self-employed customer is used to having to provide to their typical lenders. I'll add to that too. I suppose we might come to it, but just a quick thing about Prospa and what Aid's saying. So that investment in technology and the service, I think another key driver for our two founders was about providing an awesome service to business customers, because they're not used to having a great experience when they apply for funding either. And so if you look at trustpilot.co.nz Prospa, you can see feedback from our customers online daily, and it's amazing.
Yeah, it's quite extraordinary. And as a business, we all listen to those. So one, we have the Trustpilot, but then we also record calls. So some of the calls are extraordinary. Like we have customers crying on the phone. I didn't know I could get this funding. Thank you so much. I've had some respect, and some of the traditional lenders aren't necessarily as fast or as kind as what we are. So we have a real people focus. So people internally. So we've got a great culture when it comes to people. So we have a one team, very flat structure. So there's about 260 people in Australia. We've got about another 65 in the Philippines, and we've got 5 here. So flat structure. If you have a problem, you can call the CEO. People can call me direct. People can call Huia direct. So it's a real people focus, but that comes through to our customers as well.
What are the different types of lending for a small business?
I mean, really, if we think about it, so a business owner would generally have a business bank account and their own personal bank account. So the first protocol they might think about is going to their own bank where their bank accounts are. Then you've got people that also have mortgages and home loans. So typically or historically, they would add on an adjunct to that and lend against their, use their mortgage or use their home to do their business lending. There are invoice finances in the market, and then there are also asset lenders, again, who specialise in equipment finance. But before Prospa arrived, you would see business having to get personal loans, personal lending in their own names, and you'd also see customers having to use credit cards. They'd have to use their own savings. They wouldn't pay themselves. Or they'd use the bank of family to be able to get access to funds.
So if a small business gets a loan or borrows some money through the bank that they're using for where they've got their mortgage, by default, does the bank use their house as a guarantee, or do you sign up to that?
The traditional lenders will always generally try and tag an asset to their lending to add more security for themselves, call it less risk averse. But the beauty of Prospa and technology and our credit decision engine, our security is in the real-time data we use and the confidence we have in our decisions. So we don't need to grab on to any security we can to try and protect ourselves.
Got it.
That makes sense?
Yeah, makes sense. So what I'm hearing you say is that a bank needs to have something physical, something that they could potentially get back off you if the default
if things go wrong.
Yeah. But then with your model, or the fintech model, is that they look at the ecosystem that you're currently in, the amount of money or revenue that's coming in and going out, and then they can assess the situation in 15 seconds. I think I saw something like you do 450 index points in a second or something like that, and then you can make a decision really quickly.
Yeah, and I mean, the beauty of that is, like, if we get a business customer in today, because of the amount, like, with the business been running in Australia for 10 years, been here in New Zealand for 3 years, and we've got tens of thousands of customers. So if we get a business customer in today, we've seen that same customer with 400, with the same kind of enough data points to understand where they sit in our risk profiling and what we can lend, and for how long, and determine that servicing and affordability. But also, in Australia, every single state has had their own set of different lockdown times and rules, as with New Zealand has within Auckland and outside of Auckland in the last 2 years. And so all of that data and our whole technology and credit team have worked on that, and so that's what we mean by real-time data. That's why we can take a look at the last 8 months business bank statements, or 12 months, and we can go, okay, business in North Canterbury, before this latest lockdown, your average monthly turnover was 35,000 a month. Cool. Okay, we can see you were shut down for level 4 for 2 weeks. There was no income. We can see at level 3, okay, you could get back to trading, but you were only trading at 50%, understandable in your industry. And then for the last 11 weeks, or what has it, you're back to normal trading, and we can see week by week, month by month, you've gone back to actually pre-monthly level incomes of 35,000 a month, or potentially even more. So we go, yeah, we've got enough data to understand that to use to be able to lend to you now. There's no point getting 2 years ago financials. It's just not relevant.
We're in a different game. So what about a business who's only just recently started and doesn't have much of a history? Does that mean that sort of this type of lending is not an option?
No, totally. We can help a business that's been trading for a minimum of 6 months. So we look at that. So 6 months is enough data for us. And actually, if a business buys a going concern, we can actually look at that business trading in that business that's been going for 3 months. So we can assess it from 3 months, or a new startup from 6 months. And we've got multiple examples of amazing business that we've been able to help from their first lend that go through and top up to. When I'll talk to one now, we helped one. I've got the scenario up. So they come in to get 10 grand. It was a side hustle, a business he started in his garage, and he was turning over $12,000 a month at that stage. So he come in July 20. Then he come back in September 20, got 15 grand. So his turnover had gone up to 18,000. Then he come back in for another 15 grand March 21. So his turnover had gone up to 38,000 at that stage. Then he come back in July 21. So not just a few months ago, he got an extra 30 grand, and his monthly turnover had increased to 53,000 per month. And then he emailed us basically in October to say, "Hey team, Prospa, I've just hit my first $100,000 sales month. Couldn't have done it without you. And in this time since I'd come to you, since from July 20, I've also opened a store and looking to open a second, and have won a prize for the biggest growth in Shopify in that time."
Cool. The style of lending is actually helping small business entrepreneurs, side hustlers get bigger faster.
Totally.
Yeah, absolutely. And so what Huia's talking about there is, and that's across our portfolio. So 70% of our customers come back for more. So we work with them, we see they're paying down, and remembering we've only got short terms. So we're not doing 25-year, 30-year terms. We only do from 3 months out to 36-month terms, but our averages would only be about 12 to 18 months. So when we're working with a customer and they're paid down, we can see that we reach out to them. What's going on in your business? Do you need more funding? And 70% of the time they come back for more funding.
If you listen to this in 2022, we're in November 2021 in New Zealand. Half the population is in a different alert level lockdown to what we are. I'm in the middle of the North Island, and Huia is down in the South Island. So what are some of the challenges that you're seeing every day?
Well, we can't ignore the old lockdowns, so that is an ongoing challenge. Really interesting though. So the lockdowns, we've been through multiple. So we've been through 4 in Auckland, so still in one and still in a form of one. When you go out in Auckland, it doesn't feel like it, but it is. So we've had 4 lockdowns in Auckland, and the first big one, so March last year, none of us knew what was going to happen. There was an uncertainty in the market. We didn't know from a risk point of view from our business. Businesses didn't know. So business confidence was really low to borrow. So we never stopped lending though, but we did very little lending between like the end of March through to June. So that was a really quiet period for us. But since then, so as Huia said, we've learnt what those businesses did. And we've learnt that by industry. So we can see, a cafe in Rotorua, and they're not dependent on the tourism, they're just servicing the locals. We can see that those industries didn't really stop. We can see businesses in Auckland that could, when the butchers and anyone could go click and collect, they just bounced back really, really quickly. So we've got that data for those 4 times, and as Huia said, same in Australia. So pulling that in, so while the pandemic's been a hugely challenging environment for everyone, we've learnt a lot and businesses have learnt a lot. So we've had so many businesses that have gone online, so they've increased their digital capabilities, they're doing click and collects. We had one business in Queenstown, so it was a retail business, which would be very dependent on tourists, so tourists coming in. They really struggled. So, the borders closed and they didn't have anyone. So they came to us, they borrowed $100,000, went online, and now they distribute globally. So now they distribute New Zealand goods globally, and they've shown that they can change. So I won't use pivot, but I'll use adapt. So businesses have to adapt with the environment. But we do regular surveys with our customers, and not just limited to our customers, also to small businesses in Australia and New Zealand. Our most recent one we did with YouGov. So we did one with YouGov for New Zealand small businesses. And lending's always been hard for businesses. It's always been difficult to get credit. So it's not a new environment, but it's just getting harder. So 55% of the last survey said it's just getting harder. So, changes in regulation and credit appetite and unsurety, it gets harder and harder for those people to get funding. And 69% of the younger businesses, so less than 5 years, and also younger people running those businesses, said they can't get lending at all. So outside of businesses like ours or other businesses with appetites like ours, they can't get it because they may not have a security. So then we've also got the housing market crisis, and you've got everything else that's going on. So they might have put all of their efforts and money and anything that they had into their business, trying to grow their business. So that's always been a challenge, but that's just an environment that's getting harder, which actually comes to some opportunities when you've got lenders like us. So we had 55% of those customers again said that they missed out on opportunities. So you can go to your bank, and a lot of people will go through that process, and then 6 weeks later they've done everything and given their first child and had to go through that whole thing, and they'll either get a yes or a no, and then they get a yes. And you know what, that business that I was trying to grow, the one that was having problems down the road, that I wanted to buy their truck, or who has had a fish and chip shop, that they had another one a block away, they wanted to set that up, that you've lost that opportunity. So you've actually missed out on opportunities because you couldn't get access to funding.
I mean, we could talk all day.
We talk all day on scenarios and the stories that we see.
Okay, I will ask a question now. That was awesome. Can you provide some examples of things that you think businesses wanting to lend or borrow money for that you think is really not the best idea, and some things that are probably a better idea for them to think about? Like, I'm thinking boats and trucks and things like that, and surfboards or whatever. But yeah, I'll let you answer it.
I mean, the boat and truck is fine if it's going to generate enough income over and above what you're borrowing it, and if it's in your plan, So I'm not going to go against anyone that wants to buy a boat or truck, and also, use it to get some downtime for themselves. But I suppose when we're talking about when's not a good time to borrow, absolutely, you'd have to reconsider if you're trying to borrow money when you don't have a really good grasp of your cash flow, or a really clear line of sight for growth in your business plan, or do you even have a business plan? So definitely that's where I'd say to reconsider. Great examples are exactly what we see every day, and it's like that investment in growth, whether it's for equipment or staff, or moving location to more suitable premises, or investing in technology to be able to do that click and collect. What we do as well, I mean, we help all those scenarios, but short-term cash flow lens. So we've got a big major company that needs to start a $15 million project next week, and the job that they finished 2 weeks ago, they're not going to get paid for that until mid-December. So you still need money to gear up, and you might just end up with this cash flow gap. And good luck for that business to ring their business manager at their bank and get a temporary overdraft. It's almost impossible. It's not just me saying this, it's feedback I get regularly from business customers and our partners that we work with.
And so as Huia said, so it's that cash flow gap, and I'll refer again to the housing crisis. People are buying into property and buying investments, and often people will strip out all their cash flow out of their business to be able to do that. So they might have cash in the business and they'll take it out, and then they go, oh shit, I need to pay the bills, or I need to pay the staff. So we can also be that cash flow gap for them when they're actually trying to run their business. We also do tax debt, and we'll do a range of things if it's viable for the business, to be able to work with them, which is why we have a risk-based pricing model. So it really depends on the strength of the business, the health of the business, the use of funds, and the industry. So that our pricing can range so varied depending on all of that.
Yeah, and actually going back to, just to touch on that again, going back on that technology, our credit decision engine that uses the data points, it's not, it's all based on data. So you don't have a person that's making all the decisions that might have read an article this morning that said trucking's a bad industry this week, or hospitality is going through the ringer. So, those kind of things, when you've got a credit manager and a person making all the decisions, there's absolute natural biases that come into play. Our technology doesn't have that, all data.
So what I'm hearing is saying that the data is the data, and if you're talking to a human being, they can be influenced by situations that they're reading, and they could be personalized to that person, which could impact whether or not a business or a side hustle or could get money or not.
Totally. Or that credit, the credit manager might not know what fintech is, or might not know what the side hustle is going to grow into, because they might not understand that new industry, or they might have just been audited by a deal that they got pinged on, and so that those things play. Or they might have had an argument with their kids this morning over trying to do their homework. Who knows? I'm not. They're great, but when you've got people making those types of decisions, absolutely, that's also what's there.
What do you think the most common reason for a small business entrepreneur or side hustler is to borrow money for?
Outside of the pandemic is supply chain. So that supply chain issues that everyone's having. So we're getting a lot of customers that might be selling retail or bringing in parts to build, bikes and things. Instead of getting one container, they're getting 3. And if they're not going to get the money for that until they start selling their goods. So they come to us quickly, and they get the money, and they can bring in the extra stock, and that can help them stay in business, but also grow their business. So supply chain's a big thing. And then so another real key thing that's come out of all the lockdowns and the border closures is that support local. So we've got a lot of people that actually feel a lot more connected with their local and their, your local grocery store and butcher and each other. So I think that's an awesome outcome of this very difficult period as well. But we do lending for any reason. So we wouldn't have really core trends. It depends on what the business is trying to achieve.
Yeah.
Is there a better time in the financial year, like a fiscal year, to borrow money than another time? So my one's, I think it's March, whatever it is. Would it be a bad idea for me to say, oh, look, I need some capital on the 3rd of March when I know my financial year finishes on the 30th of March? Does it matter?
I think it really depends on the cycle of your business and what you need the funding for. So as I said, we regularly look at our businesses and our customers that are coming in. It's something I actually love about the business. So it's all real time. We're all real time data for us as well. We can see the flow of business. It's all in the cloud. So, it's the customers come through and we can see what's happening. The agents can see, the BDMs, the brokers, partners that we go through, they can see what's happening too. They get milestones. But it really depends on what's happening in that business. So you can claim back, and that's that mixing of personal and business finance. So it gets dangerous if someone's using their credit card or their mum and dad or their family funds, because then it's not a fit for purpose product. Whereas the actual business lending is fit for purpose, and you can claim interest through a tax deductibility. But New Zealand's kind of different than Australia. And Oz, you can offset things like purchases of assets and things, but before the end of the financial years, we don't really have those abilities here.
We wouldn't recommend lending just to lend. You'd have to have a clear set purpose.
Have you noticed any changes in small business and entrepreneurs' behaviours in the last sort of 18 months, specifically from COVID?
Yeah, we have. So, so as I said, that last big lockdown was pretty scary for everyone. So, but I think the ability to adapt and to learn more about their own businesses, but then to have a plan. So, if it is retail, so I'm selling stock, or if I've got my cafe, so that ability to change. New Zealanders are resilient, and I talk about number 8 wire all the time when we talk about customers. I say it to the Australians, and I've got no idea what we're talking about. What's that? So that's what we are, resilient, and I think much more so than many countries around the world. So we've learned that. They're more innovative. So I think people are, as Huia said, we've had people with a lot of side hustles that become new businesses. We do things like franchises someone's already got. So we don't do startups, but if someone's already got a Pizza Hut and they want to buy another one, we'll lend against the existing one. So we're looking at the cash flow of their existing business. So we've got a lot of that. So people are actually growing. People haven't been able to travel, so they've invested a lot in their businesses. So they're working, small business owners. And we're not only small business owners, as we said, we go up to 500,000. So that's a large business that's borrowing 500 from us. So that's not just a small one. And again, the surveys that we do, so we had an RFI addressable market survey, and 55% of those recent surveyed customers said they're planning on investing in their business. So I think people kind of look forward. So stop looking backwards, let's look forward and focus on the future.
Yeah, I think they've also looked, they've had to look, they've leaned out the business too. So really leaned it out and understood what drives the business and what they really need. So that investment in technology is huge. And also understanding the pain point, like your staffing. Staffing's a huge issue for business, purely because the job market's so competitive out there. So they've really had to pare back a lot of expenses, but also investing in the things that are helping them to grow.
That leads really well into my next question, which is, I'm making up a fictitious business. You mentioned that there's 55% of people in the next 12 months who are more than likely to borrow money to help move their business forward. So let's say COVID's had negative impacts on businesses, but also COVID's had a lot of positive impacts on business as well. So I'm going to focus on a fictitious business that's doing well. And in February, coming up in 2022, they're going to go gangbusters. The revenue's coming in, but they know that they need more staff. What is it? Is it a good option to get the staff now and borrow some money to pay them because you know that the revenue's coming, or is there a tactic that you think would be better to do than that?
Yeah, well, as Huia said, staffing is tough, and it's tough. It's tough globally. So people really are struggling. There's a lot of headhunting going on. There's a lot of, everyone talks about the Great Resignation that's coming. funnily, they also talk about the great separation. So people are leaving their partners because they've been sitting home with them for 18 months. But the great resignation, and it is happening. So, you know, a lot of people have worked from home going, oh, actually, I don't want to go back to work. So that investment, so whether that's to get staff or whether that's to, we're dealing with a lady in Takapuna that's got a restaurant, but she wants to get the shop next door to be able to have some outdoor eating and have some music. So whether it's investing in your business for that time, so whether that's staffing, online, stock, whatever that is, it's that use of fund and then the return on that. So you return on investment into your business. So as I said, we have a lot of our customers come back for more money, and we can see if they've invested $20,000. So we go up to 500, but our average loan size is still only about $50,000. So trying to get an overdraft or a loan from a bank for $50,000 is very difficult. So if they take $50,000, invest in their business, and then we can see time and time again that their revenue has increased, and we see it all the time. So it's that return on investment. So he's probably got some more relevant, more recent examples.
Oh yeah, absolutely, and you're right. It's that egg before the chicken, before the egg, before the chicken, and that's where that business planning comes into play, and actually knowing your bottom line, knowing your cash flow, and what each movement, how that's going to generate more income into your business. So absolutely, if employing staff now that you're going to have to pay over Christmas, whether they're going to have a break or not, if you can rationalise and cost all that and work out what that's going to generate now leading into February, then do it now. But if it's not going to make sense because of the seasonality of your business or the product that you're selling, then maybe it is you need to wait till January. But again, it's having that business plan, that drive, understanding your business in and out, and really having a good idea of your cash flow and where you sit now, which goes back again to really separating that personal and business income.
It's been said a number of times throughout our conversation that businesses need to have a cash flow forecast. Do you have any tools or know of any tools that a small business could utilize to develop a cash flow forecast?
Funny you say that. Okay, we don't have it yet, but it's coming. But there are. I mean, you've got your zeros, and there's definitely loads and loads of tools out there for business to be able to keep a lid on that. But it's kind of like so you get some business that operate, and the business owner thinks they have to do everything. They're working 6-7 days. They've got all these different hats on, and that's where is it worthwhile to outsource and get someone who knows what they're doing, you know, in your accounts, to make sure that stuff is separated out and you're actually getting paid on time and you're also paying on time. So, there definitely is technology and different apps out there that also can do that for you, for whatever industry you're in, you know. And there's so much information out there online within your mentors. Every business owner has an accountant, and business owners tend to mingle with business owners as well. So it's really getting that support from the people around you.
We also, Craig, we also do a lot of blogs. So we do a lot of educational blogs for business owners. So when it comes up to the end of the tax year, into financial year, we'll have a lot of tips and hints on there. When we went through the big lockdowns, we put on all the, you know, the government links that you could go and get support, and all the kind of things that you could do. And a lot of it's, you know, it's not about funding. It's just about how can we help businesses to be able to run their businesses. So we have a range of blogs on our website, and we send those out to our customers too once we've got them.
What is your website domain?
Prospa.co.nz. Prospa, Prospa. .co.nz.
Prosper.
We'll make sure that we put the links in the show notes so if anyone does need to have a look at some of those blogs and get some information to help them out through the lending process, we can definitely do that. Leading into the next few more questions to go, how do you see the next 18 months sort of playing out for small businesses?
I think it's looking to the future. I think we're all sick of COVID. I think everyone's over it. Everyone's, you know, it's actually quite rare to get a whole conversation. People are talking about the last 18 months now. So I think people are looking forward, getting excited about, you know, getting back into business and actually being able to do things, getting excited about the borders being able to open and actually get more people tipping into New Zealand. So I think a lot of businesses are looking at that. And one of the things you asked before about some changes that we've seen, and it's definitely something we've seen, is that we're nearly 3 years old here, and it's that ability or comfort to go digital. So when we're talking to a customer, and how we get that real-time data is we get access to their trading account. So it's a digital process. When we started, there wasn't a lot of people doing that, and people were, they might have been a bit unsure about it. But because we've been so digital now, and online Zooms, Huia's on road, so she goes out and sees advisors throughout New Zealand, whereas a lot of people are now happy to do it like this. They're happy to do it digitally. They're happy to, do a FaceTime or to talk through it. So I think there's been a real shift, and I think it was coming anyway. I think it is the way of the future, but I think that's been condensed really, really quickly because people are a lot more comfortable because we've all been sitting at home. So I think that's a change. I think it's being comfortable with it, getting online, having those abilities to be able to manage a business if anything like this ever happens again. So I don't think people forget what we've been through, but how do we get through it? You got anything else for that, Huia?
Same. I think staying lean, understanding where the best places are to put their money to keep going and to keep growing, and making sure they've got the right people around them to help them on that journey, whether it's your staff, your mentors, and anyone else you look up to in business.
Moving through to our last question, and I asked the same question to all the guests we've had so far, and I will, because it's really valuable. If you could provide one piece of advice, so one each, for a small business, what would that be?
I'll go first. So capital makes the world go round. Capital makes you move forward. Capital keeps you going. So one of our main slogans in our business is we help businesses to run, grow, play. So we actually help businesses to do all those things, but you need capital to be able to do that. So sometimes people are a bit unsure or a bit scared about borrowing. But as we've said, if you've got a real reason and you've got a need, then that borrowing can actually help businesses to get to that next level.
Yeah, and I'll go, I'll say keep that day one startup mentality. And so always looking for innovation, always looking to grow, looking for opportunities, and don't let legacy or what we've done before, can't do that again because it never worked, and keeping those kind of things out. So that would be my addition to that.
Huia and Adrienne, thank you very much for your time. It's much appreciated. We'll make sure that we have got Prospa, all the links and how you can get in touch with Huia or Adrienne and get some business lending if you need it. But other than that, thank you very much for your time. I hope you both enjoyed it, and we all do appreciate it.
Yeah, it's awesome. It was a lot of fun. Thanks, Craig. Thanks for the opportunity.
No problem. Thanks a lot.
Thanks.
See ya.
See ya.